all of this outperformance in the pound of late and yet no real clarity. So we thought it would be a good idea to give a quick overview here, which will help reconcile this renewed demand for what has been a beaten down currency over the past several months. The fact that the pound has been so beaten down actually has a lot to do with this run of strength that we're seeing, which continues to be much less about any clarity on exactly what lies ahead for the UK economy post-EU referendum, and a lot more about what looks like it won't be happening, which has been the source of the pound's miserable run since it topped out at a post-EU referendum high back in April of 2018. In recent weeks, it's become increasingly apparent just how catastrophic a no-deal Brexit in March could be to not only the UK economy and not only the UK and Eurozone economies, but to the global economy as well, given the systemic risk associated with such a tail risk event. And so the bottom line is that we are seeing the pound moving higher despite ongoing uncertainty, as whatever alternative uncertainty exists is an alternative uncertainty that doesn't involve a hard Brexit in March, an alternative uncertainty that leaves the market feeling a lot better about the prospects for a UK currency that had taken a beating on the pricing of a tail risk event as if it was the base case scenario. So what are those alternatives and what lies ahead? Well, the alternatives are a delay of the Brexit date or possibly a second referendum down the road, which could ultimately render all of what we've seen over the past few years as a big waste of time. In the immediate future, the timeline that has been floating around is as follows. On March 12th, a meaningful vote on Theresa May's revised deal, and if passed, the UK would leave on March 29th with Theresa May's deal. On March 13th, there is a vote to the UK to proceed with the no Brexit deal, and if passed, the UK would leave on the 29th with no deal. On March 14th, there would be a vote for a short limited extension to Article 50, delaying Brexit, and if passed, the Prime Minister would need to request that extension from the EU, an extension that would require unanimous backing from the other 27 EU member states. Should we get to that point where a delay is voted on, the UK and EU will then need to agree on the length of the delay. The UK side would favor a shorter delay of 2 to 3 months, while the EU would be more inclined for a delay of 21 months to give a real shot at working things out. Of course, all of this comes with what will be a likely revolt from Tory Brexiteers. So there's a lot of uncertainty ahead, but as we have outlined, uncertainty with downside risk to the pound that is less severe than the current exchange rate has been reflecting due to its worry about that no-deal Brexit in March, which does not look like it will be happening. Technically speaking, the pound has rallied back into a critical resistance zone and is considering the establishment back above the September 2018 high against the US dollar. That level comes in at 133, and if we see the market push through and hold up above that 133 figure, it could do a good job convincing medium-term and longer-term players that they should think about reconsidering their UK exposure and their currency exposure to the pound. That's all for now.